Is the case for a $10,000 Ethereum a valid one? Will ETH flip BTC's market cap? And is Binance Smart Chain still a threat to Ethereum? Hey guys, Sheldon Evans here, welcome back. Or if you're new here, don't forget to hit the subscribe button and turn on all of the bell notifications. I really do appreciate it if you give the video a thumbs up too. It really does help the channel. Right, so on my display, I have the Ethereum US dollar chart open, and you guys would have remembered from my previous video that I said if we did break through this $2,500 level, the 1618 fib level, we would see a strong move to the upside to around $3,000. And the reason that we have this $3,000 level here and not the next fib level is due to this being a psychological level. Strong round numbers like $1,000, $2,000, $3,000 are usually psychological levels where people will start taking profits, and we might see a bit of a resistance and a bit of a sell-off. So that is exactly what has happened. We approached $3,000 around $2,950, very, very close to 3K, and we saw a bit of a retracement or a bit of a rejection. But if we have a strong recovery from here, I do believe we will see a strong movement upwards towards the $3,300, well, at this moment, $3,270 level. But this is in wake of a variety of different factors fueling this growth, which we'll cover in this video, along with some news later on in the video too. Now, the first thing we want to look at is this Twitter thread from Spencer Noon on Twitter, covering 10 signs that ETH is well on its way to $10,000. Now, these factors play a huge role in where Ethereum is going, and I've covered some of these metrics before on this channel, but this is a great thread covering all of these, so I want to give credit to Spencer Noon where credit is due. Spencer Noon seems to be a trouble for me to say. Number one, Ethereum dwarfs every blockchain in terms of fees paid, with a current run rate of nearly $7 billion, confirming massive demand for ETH block space. Now, this is a strange metric to talk about. Some people might say, well, of course there's so many fees because Ethereum is incredibly high in the fee department and Binance Smart Chain and so on are much cheaper. So of course the fees will be higher on Ethereum. But what this actually illustrates is that there's still a huge demand for Ethereum, even in light of the high fees. So it means that people are still building on Ethereum, are still transacting on Ethereum, even though the fees are so high. So what this means is that when fees get lowered, when layer 2 solutions come along, as they are currently, which we'll talk about in a second, we will see this demand increase even more. Now, when EIP 1559 gets implemented later in July, we will see this fee number decrease, but we might see the number of transactions increase. And with more transactions, more Ethereum is burnt, therefore increasing the price of Ethereum. As you know, with the new upgrade, what is going to happen is instead of the Ethereum going to the miners, a portion of that fee is going to be burnt, making Ethereum a deflationary currency. So the more transactions we have on Ethereum, actually the more bullish it is for Ethereum, because we will be decreasing the overall supply of Ethereum. Next, Ethereum settles $30.5 billion worth of value every day, far more than Bitcoin and every other blockchain. To put this into context, PayPal settles around $2.5 billion daily. Now, this is crazy to think about. To think that PayPal, one of the largest settlement systems in the world, settling tons of e-commerce transactions and transactions online, yet crypto, just a small percentage of the world is involved in crypto, just a small percentage of the world is using crypto, settles tons more transactions than PayPal. Super, super bullish for this. Ethereum has 625,000 daily active addresses, a figure that continues to climb and is now comfortably sitting at all-time highs. So this is a regular metric just showing how much adoption we have. Of course, not every Ethereum address means that that's an additional user into the space, as many of us have multiple Ethereum addresses, as I'm sure you do as well. But it does show that people are being onboarded into the space, even though it might not be a linear ratio. There are still new users continually entering the space, and they are flocking to Ethereum. Yes, Binance Smart Chain and many of the other layer 1 solutions will attract new users, but for this moment, Ethereum seems to be growing at a rate that has been consistent over the past few years. There's now $65 billion locked in DeFi, with 16 different projects having more than $1 billion total value locked, a sign that Ethereum is institutional grade financial technology. Now, we know that institutions are coming in masses to this bull run, and we see them buying Bitcoin. But the next logical step is to buy Ethereum as well. If they get exposure into the cryptocurrency market, the first thing they look at is Bitcoin. But the next logical step is, of course, Ethereum. If Bitcoin is being seen as the digital gold, Ethereum is being seen as the digital oil, or even the digital derivatives market, which we'll talk about in a second as to why Ethereum could possibly flip Bitcoin's market cap, even if that is temporary. But we'll cover that in a second. Ethereum has $50 billion in outstanding stablecoin supply with 500k daily unique senders and 20 billion in value being exchanged per day, a sign of explosive product market fit. So it means that people are coming to Ethereum with their stablecoins. Monthly DEX volume stands at more than $60 billion, up 60 times year over year, proving that DeFi liquidity already rivals CeFi. So we know that a lot of the volume has shifted towards decentralized exchanges. Even though it's not necessarily just on Ethereum, we are seeing a lot of that volume move over to DeFi. And the reason for this is many people want to avoid KYC, they want to be in a more decentralized state, they want to be in a more decentralized arena, and that is why we are seeing this move towards DEXs. Now, this poses the idea as to why Binance Smart Chain is so big. Why is it growing so quickly if everybody wants to go to DeFi? Well, it is a temporary solution, right? Most people come into the space, new users and future users come into the space looking for the best solution for themselves as a retail investor or a retail user. And one of the major factors that prevents them from using Ethereum is, of course, the high fees. So now, in order to get those users back into the ecosystem, Ethereum would obviously have to have lower fees in the future. But even this, despite this, most users are still using DEXs. They are moving to DEXs away from centralized exchanges, which is incredibly bullish, not just for Ethereum, but for the entire space as a whole. There are more than 200,000 Bitcoin that are now represented on Ethereum in various forms, a sign that ETH is becoming an economic vacuum for all assets, including Bitcoin. Now, you guys might know this as well, but you get wrapped Bitcoin that is then tokenized and used on the Ethereum blockchain. So even other assets like Bitcoin are being used and moved over to the Ethereum network, showing that ETH is the place to be. It is where most developers are. It is where the most activity and economic activity in the DeFi space is happening currently. And this is just the beginning currently at the moment. So there are tons of new users coming into the space, and they are looking towards Ethereum, which we'll cover in a second as well. I know you're thinking, yes, but they're going to BSC because the fees are cheaper, but we'll cover that in a second. Sales of NFTs on Ethereum have now surpassed $600 million, with 13 pieces selling for $1 million each, a sign that new categories of applications are also emerging in ETH. So we have seen this huge surge in NFTs and the use case for NFTs, but this doesn't necessarily mean that this is the future of crypto, right? There are new use cases happening or being discovered every single day. We don't know the full future use of blockchain. That is what this space is. It's an experimental space. It's a playground. It's a sandbox. And you need to realize that. So when we do see things go wrong in crypto, when we do see things go wrong in code and hacks and so on, these are all experimental times. Everything that you see in crypto right now is a proof of concept. It's an experimental solution. So people are playing, things are breaking, and the faster they break and the faster they get fixed, the better the space moves and the faster we can progress forward. The faster things break, the faster we can grow. So it's really good that we're seeing this. We're seeing these new uses for ETH and these new categories of applications being used on Ethereum, even though there are other solutions out there and other chains and layer one solutions where they could go, yet they're still seemingly choosing Ethereum, which is fantastic news. Next, Polygon is currently doing 1 million daily transactions and has onboarded numerous DeFi blue chip projects, including Aave, which has around $2 billion in liquidity there, disproving the Ethereum can't scale narrative. Now, you guys know that this is the problem that I've just highlighted, is that Ethereum is very expensive. It can't scale. And to look at this, we have to look at the blockchain trilemma, right? Which is decentralization, scalability, and security. Now, generally, this is what blockchain developers face as an issue when they're developing these blockchains. Generally, one of these has to have a sacrifice. One of these has to be cut off in order for the other two to prevail. So generally, decentralization and security is what we have with Ethereum. Therefore, we sacrifice on scalability short term. But that is not a problem because we do have improvements coming along that will help with the scalability. But even at that state, Ethereum still won't be as scalable as some other networks that sacrifice another of these aspects. For example, Binance Smart Chain, where it sacrifices some of the decentralization in order to have a very scalable, fast transaction network. Now, in general, it depends on what the sort of overall vision or determination of that project is to be. For example, with Ethereum, the idea is to be a very decentralized and secure network, so they haven't really worried too much about having the scalability issue. But even with that, it does show us that a lot of this volume, a lot of this is looking for other solutions. They are moving to other options like Binance Smart Chain, which is sucking some of the volume away from Ethereum. But knowing that there are solutions in the pipeline, knowing that there are things coming along to solve these problems, we still see Ethereum growing. And that is why I do believe that we will see continued growth for Ethereum, at least leading up to the EIP 1559 protocol upgrade, which if that does happen, and we see an improvement in scalability with layer 2 solutions, it's almost a no-brainer that Ethereum will be skyrocketing this year. Now, let's look at Binance Smart Chain. Like I said, Binance Smart Chain has been sort of a vacuum site for some of the Ethereum transactions, some of the Ethereum volume. We've seen Binance basically skyrocket over the past few months. And in doing so, it has taken a lot of the transactions away from Ethereum. So we get this tweet from Zusu, which says, I actually think BSC has been one of the most bullish catalysts ever for ETH. Metaverse is not zero sum. Going to Mars is not bearish for Earth. Now, you guys know this. I've said this many, many times on this channel that crypto and the financial market is not a zero sum game. One person doesn't have to succeed for the other to lose, and one doesn't have to lose for another to succeed. Everyone can win because this is such an early game. There's enough volume, there's enough coming into the system that everyone can succeed, at least at the start. Eventually, we will get to a point where one overtakes another, or where one prevails and shows up as the leader of the space. But for now, we will see many of these succeed in their own ecosystems. And this is in response to another tweet from Hot Tendies, or Hotendies. One of the biggest threats for DeFi on ETH has always been a top-tier fintech centralized company copy-pasting the code of the most popular DeFi projects and offering it to the users with 10x better UX and negligible fees. And this is talking about Binance Smart Chain. New users coming to the space don't necessarily care about decentralization. They don't necessarily care about what is going on behind the scenes, right? You don't really care that Binance Smart Chain is not nearly as decentralized as Ethereum if you can pay 10 times less in the fees. But if we look at this in the long run, if we have a long-term vision for this, you'll understand that we will get to a point where blockchain and cryptocurrency is not necessarily just about the investment. It's not about people making money. It's forming the underlying tech to a new financial world, to a new technical world. This is what happened with the internet, right? Most people saw the internet as sort of a competitor to the radio or to the television, when in fact it was an overall medium for all of those aspects. And that is essentially what cryptocurrency is going to be. We will see mass adoption when people start using crypto without knowing that they're using cryptocurrency. At this point, the main use case for this whole space is purely speculation. It's people throwing bets and coming into the space to make money. Most people coming into cryptocurrency, when you talk to them, the first thing they think about is, sure, I can make 10x gains, I can make 100x gains. They come into the space with a mentality that they're going to be increasing their fiat gains. They don't really yet understand the concept of cryptocurrency and the true power of the technology behind the space. So sure, in the short term, we will have issues like this, where these centralized companies come into the space and sort of take some of that volume away and succeed in the short term. But if we look and have a long-term vision, we will see a lot of this coming back to Ethereum, or possibly even additional volume coming to Ethereum, to Polkadot, to Cardano, and so on. There's going to be an equal growth in all of these till eventually one will succeed out of the top 10, 20 coins, and one of them will show or prove to be the best, right? But it doesn't necessarily mean that the second place is going to be the worst. They can be top 5, and they can all succeed in synchronicity. Then we have a tweet or a thread from Crypto Cobain, which basically says that Ethereum could actually flip Bitcoin's market cap this bull run, or maybe not even this bull run, but eventually. But the idea behind this is that Bitcoin technically is being compared with gold, right? And the overall value for gold currently is around $10 trillion. But Ethereum is not necessarily competing with silver. It's not competing with diamonds or oil. It's competing with pretty much everything. It's looking to suck the world out of the financial market and bring it over to the decentralized network. Now, with Binance Smart Chain, like I said, there's less decentralization, right? So why would users in the long run not typically stick to the traditional financial system? That is a centralized entity, it's a centralized system. Why would they not stick to that? They're coming into the system with the idea of making gains. They're not coming into the system with the idea that blockchain is the future. Now, if we look at it with that view, we will see that Ethereum could be the base layer for the future of fintech, for the future of tech in general. So the total addressable market of things for Ethereum is just gigantic. So even if Bitcoin gets the store of value as the digital gold narrative, the market cap of gold is still lower than the total addressable market of everything, like of all money. And I've mentioned a very similar thought in the past, and that is, what if Ethereum could truly become or take value away from the derivatives market? We see gold having a $10 trillion market cap, but we see the derivatives market and the rest of the fintech market having not tens of billions, not hundreds of billions, but trillions of dollars in market cap that could potentially flow into Ethereum, or at least into the cryptocurrency industry. And that's why there's the potential to have the total crypto market cap in the tens or even hundreds of trillions of dollars. As crazy as that is to think about, it is very possible. We're still in the very early stages of this entire industry. This thing, like I've said, is still very much in the sandbox mode. Things are breaking, money's getting stolen left, right, and center. And it's a very experimental space. So with that being said, it's still very, very early stages. And if this money is to flow into the space, it's more than likely going to go to Ethereum, or at least into something else that can compete with Ethereum on the same level. Now, when you go back to the Bitcoin or the blockchain trilemma, which is scalability, security, and decentralization, often one has to be sacrificed, right? But if something can come along that can solve all three of those issues, that would more than likely be the leader in the space. And from this point, we do see the layer 2 solutions coming towards Ethereum, and we're solving a lot of these issues and solving all three of those problems that we have in blockchain. And if Ethereum can keep this up, we're going to see a lot of that move towards Ethereum. Now, if ETH is to flip Bitcoin's market cap, right, at $340 billion currently and Bitcoin at $1 trillion, we could see this temporarily flip. Like I said, Bitcoin would have to get to $10 trillion. Now, it's unlikely that Ethereum would flip Bitcoin perhaps in this cycle, but possibly in the future as it sustains itself or proves itself as the true new backing of the world of fintech, as the real new fintech solution, and money from traditional institutions and so on start trusting Ethereum. Now, of course, we will have Cardano, of course, we'll have Polkadot, of course, we'll have Solana, and all of these coming in to potentially take some of that value away. And it's almost impossible to predict which one will be the winner, but we don't have to do that. You guys know that if you're a fan of the channel, you've been here for a while, we don't have to predict the winner. That's not our job. Our job is to support the space as a whole. One of these will succeed. Put your bets where you think would be best and make some money along the way. Now, the scalability narrative solution for Ethereum is layer 2 scaling solutions facilitate faster and cheaper transactions by running sidechains or tangential networks alongside the main Ethereum blockchain. Demand for these projects has picked up in the wake of network congestions and high transaction costs on Ethereum's blockchain, with prominent DeFi protocols like Aave announcing integration with Polygon earlier this month. And if you did see this, or you noticed this announcement, you would have seen this absolutely huge growth in Polygon, where over $1 billion in liquidity and over 7,500 users on a single application 10 days after the launch. So we had $1 billion in this locked up. And we saw this on QuickSwap. We saw QuickSwap, which is basically the Polygon layer 2 solution for Ethereum. So you can trade for way less fees on this using Polygon, or previously Matic, if you guys didn't know that. They did rebrand to Polygon. And we saw this uptick initially, and now we saw this huge uptick in liquidity and therefore an uptick in volume as well. And this just shows that if we do have the solution to fees, the solution to faster transactions and more transactions on Ethereum for a lower cost, people will flock to Ethereum because it is where most of the development and most of the volume is, and where most projects are built currently. And I believe we will see that continuing. Now, let's get into some news and some things that have happened this week. And firstly, we have Elon Musk. As you guys might have known, Tesla sold around 10% of their Bitcoin holdings. So we have this tweet from Dave Portnoy. So am I understanding this correctly? Elon Musk buys Bitcoin, then he pumps it. It goes up, then he dumps it and makes a fortune. Listen, I own one Bitcoin, but Bitcoin is exactly who we thought it was. Just don't be the one last hodling the bag. So Elon responded to this and said, no, you do not. I have not sold any of my Bitcoin. Tesla sold 10% of its holdings, essentially to prove liquidity of Bitcoin as an alternative to holding cash on the balance sheet. So while there was a lot of news saying that Tesla sold their Bitcoin just to pump their profits and maybe just to exit the market, who knows? But the truth is that this is actually a very bullish sign for Bitcoin. This is a very bullish sign for Tesla as well. They didn't sell their Bitcoin holdings because they don't believe in Bitcoin any longer. They actually sold their holdings to prove that they truly do believe in Bitcoin, because they sold it to prove liquidity. One of the issues that many people have and many institutions have with holding Bitcoin is that potentially they cannot liquidate it. They can't sell it, and they'll be hodling the bag, as we have here from Dave. But the truth is that holding Bitcoin is basically equivalent to holding cash in terms of liquidity, which is what they proved, and if not better, because it has a higher long-term value and it's a higher appreciating value asset. So it is much better than holding cash on your balance sheet, and we've proven that now, and Elon has proven that. We also have a bit of a hint in here that I have not sold any of my Bitcoin. Now, we don't really have any announcement that Elon owns any Bitcoin. Of course, he isn't obliged to tell anyone that he owns Bitcoin, but it's just interesting that he did say that here, because it does mean that he is holding Bitcoin, at least potentially, as this could also just be some sort of meme troll. We know Elon is quite a bit of a troll, which is fantastic. It's really good. It's fun, but he also needs to understand that I think what he says, we need to understand that a lot of what he says does have a huge impact on the space. So it's essential that he thinks with caution and speaks with caution when he does talk about these things. But from what we understand here, it is potentially true that Elon Musk owns Bitcoin. We're not sure how much. He could even own 100,000th of a Bitcoin. We don't know yet, but it is quite exciting to know that. Next up, we have some news from Axion, which, as you guys know, I have been an early investor in. I invested in Axion when it was still HTT over a year ago. So not sponsored at all, just some news from them. Axion and Securitas are partnering up to launch the SKRT on May 8th with a $225,000 airdrop to Axion max share stakers. So as you guys know, Axion is typically a CD or certificate of deposit on the blockchain, which is what they are marketing themselves as. And they are now basically a launchpad too. Now, you guys know there's a ton of hype around launchpads because it is a way for people to get into early listings and early coins to make some good profits. And that's exactly what they're doing. And they've understood that, I'm sure, many of these projects are growing dramatically by positioning themselves as launchpads, and I think that's what they're doing here as well. So the max share stakers, basically those who stake for, I think, 5,555 days, which is 15 years, will then get a part of this SKRT token. So they will be airdropped this if you are a max share staker. Now, if you are a max share staker as well, I'm sure you guys know that you can earn liquid Bitcoin from the venture capital auctions that happen on Axion. So if you do stake your Axion, you will earn Bitcoin in your wallet directly. So it's very interesting that they're doing this and partnering with Securitas. Now, Securitas is airdropping all of this. You can go to this link. I'm sure you guys, if you want, you can go visit this tweet, visit the link, and you can participate in this IO as well and get your share of the SKRT tokens with Securitas. I will speak more on Securitas very, very soon as to what they are and what they're offering. I think it's a very interesting and needed project in this space, but we'll cover that in a future video. And finally, we have some news from Coinbase now letting you buy cryptocurrency with your PayPal account. Now, you guys would have remembered early on in the year that PayPal started offering cryptocurrency on their platform, and you could buy crypto with PayPal, which is fantastic news for the space and it really helps with onboarding. But technically, it's not really buying cryptocurrency. You're buying an IOU. You're buying a digital version of the asset. You aren't able to withdraw it from the platform. You can simply hold it in PayPal, and you would have to sell it or dispose of it in order to withdraw that cryptocurrency. So it's very interesting that they've now partnered with Coinbase, allowing you to buy cryptocurrency with PayPal as basically the fiat on-ramp for cryptocurrency. So it's fantastic that you can now actually buy true crypto with PayPal, not in the past, like just simply holding some crypto in your PayPal wallet. Things like this are very interesting to me and very supportive of the space because they really do help the space grow. As you guys know, the more fiat on-ramps that we have, the more people we have coming into the space, or basically regular users, regular people coming into the space, the easier it becomes for them to interact with the space. As I mentioned earlier in the video, the more you can use cryptocurrency or you can get involved in cryptocurrency without understanding or knowing that you're using it, it's actually a very bullish thing for the space. You don't have to be this huge tech head, this huge nerd to get into cryptocurrency. That is actually a very limiting factor that stops people from onboarding into any new industry, is when it is too complex and too nerdy, because most people don't have the time or energy and maybe don't even want to understand the tech behind it. Like I've said before, you're using the internet right now. Perhaps, very likely, you don't understand the very baseline tech behind it. You just know that you open up your browser and you start browsing YouTube and start using it. You don't really understand the protocols and the interfaces and the tech behind it, but you use it on a daily basis. And I think when we get to that point for crypto and that point for blockchain is when we really start seeing mass adoption. That's it for today's video. I hope you guys liked it. If you did, please don't forget to give the video a thumbs up, hit the subscribe button, and turn on those bell notifications. As always, I shall see you in the next video. Cheers.